All right, welcome everyone. Welcome to Budget Ki Baat. I have with me Mr. Sachin Relekar from ICICI, and this is going to be a very interesting episode with lots of insights into the budget and its impact into the markets. I'll start without wasting any time. I'll start with a broader outlook. I'll ask for, sir, what is your overall thought on the budget? Did you like it? What do you see? How do you see markets reacting to it?
Market reaction is still settling down, so I think that is for everyone to judge and see. But overall, just to give you a context here, I think when pre-budget going into this, I think the roadmap for fiscal consolidation was quite well set. Now this is getting more crystallized because they have given a glide path for debt to GDP ratio. I think that is one more focus which is clearly coming out. And I think glide path is basically they want the policymakers want the debt to GDP ratio to come down to pre-COVID levels, which is as of now at 56, 57%. If the glide path continues, I think they will settle at something closer to 50%, which is a very good positioning from the fiscal point of view. That is one important factor. The reinforcement of that came through this 4.5% as a GDP gross fiscal deficit to GDP ratio. So those are the very balancing and a prudent act in my view. Then in terms of there was also a sentiment that consumption is a little bit taking a hit. Therefore, I think this tax cut which is there, and I think what finance minister also reiterated in the budget speech as to the transparency, the honesty of the taxpayer, etc., that needs to be rewarded. I think that is clearly a good thing. And by the way, I'm not treating this as a welfare measure because it is not cash transfer. It's a tax simplification, some kind of a relief on that, which cuts across the strata, which is quite balanced in my view. So I think that is all those things seem to be positive. Market is treating as capex negative. Just want to highlight that it is not capex negative in my view. All numbers which are projected also in terms of the estimates are quite healthy. Last year being election year, actually the capex spend was slower, and that is typical election year phenomenon because most of the machinery, everything get very engaged with the election process, and which is very big process by the way. And along with that, some of the major states also went into the election. So some kind of a slowdown on the spend per happen. And I think that will get front loaded perhaps given the revival in the cycle, which is also of a need. So that can get front loaded and that can revive some of the cyclical factors also. Again, important part is direct involvement of the union government in the capex spend per se is now coming limited to few of the sectors. And those are basically defense. There you are seeing the allocations are quite healthy. Roads and railways. Now, railways is something where the capacity to spend because of the institutional capacity which is getting built up is what is limited. Otherwise, the capex spend requirement or the allocation over there also remains healthy. Defense I spoke about. Roads incremental spend per se are going in the right direction, but if you actually see a lot of that actually already in place. So to read it as a negative because it is tilting on the tax implication or tax reduction sort of as a capex negative, I think is not the right thing to do. So I'm not getting very negative or jittery about that. Although the market reaction is because you want to tilt more to the consumption place, then some of the funding can move from this side to that side. So that's just from limiting this to the budget point of view. It's not negative in any big manner per se. Certain assumptions about how much they will look to have tax collections or revenue coming from the direct taxation. There can be certain assumptions which looks to be a little optimistic in most of the experts' view. That I agree, but we'll have to wait and see. I mean, what they're banking on. Perhaps if that lever doesn't come through, then certain other levers can also come through. There's also a divestment target, which they have mentioned, which is quite modest in my view. They can do a lot more, but given the market capitalization government shares actually hold. So there is a scope to do more. So those are broadly the things. And one important thing which you had seen over the weekend, which has started to unfold, and which is basically the uncertainty of the macro backdrop globally. like the Trump and new president which is there, and tariff has been talked about a lot. I think that is also an important variable. So in that context, if you see the consolidation path which is there is quite healthy, because then you're saying the robustness of the fiscal finances is important, and therefore if you see it in that context, this is the very prudent approach which government decided to take. So I'm not turning very jittery about, or there are not too many factors which I'm saying are negative. And I think the consumption, especially which is going to lead expectedly towards the discretionary consumption, it's a good sign, because that can also invite or incentivize certain private capex. And again, just touching on this capex part, the big part of the capex which is playing out in renewable energy or power utilities per se is anyway driven by the private sector right now. Airports are also happening to the private sector participation by and large. So that does not get affected by any of these things. And if the fiscal consolidation path actually moves quite steadily and quite clearly ahead, it actually also sets a backdrop for lower cost of capital overall in the system, which is good for the private capex as well as good for the private participation in certain big capex spends which is there. So seeing it from more from a medium to long term point of view, it actually setting up as a, or looking as a good structurally or setup wise, it is actually quite healthy. So I think I'll just restrict myself to this kind of a broad comment, and then maybe specific questions if you have. I think that will be good to address.
Absolutely, sir. Sir, you that was a very insightful and comprehensive summary of the budget and its impact. If we get a little sector specific, we talked about capex is not necessarily bad, as I understood from you, and consumption side of the story is going to be revived a little bit. Talking a little sector specific, which where will these flows go to, and which are the sectors or themes that maybe retail investors should keep an eye on based on these factors?
So I think in terms of the theme, there are two, three large themes. One is consumer discretionary itself, and maybe starting with low ticket consumption discretionary. That is a clear and perhaps the first derivative of this entire shift which is there in the tax regime, because a lot of people will get benefited, the disposable income likely to go up, and that will reflect into the consumer discretionary first and foremost, and that is very clear. And maybe there are air conditioners or home improvement, all those things also come into the play. Plus as I said, the real estate cycle continues to be quite healthy across the top 7 cities, which matters from a value point of view. And so those are the thing, and that will also drive the private capex also. So I think consumer discretionary real estate cycle remains to be healthy. Another important part where I think the capex is playing out quite well, and there is a path to that, which is the renewable part. And there also government also talked about the renewable part in the budget speech, also incentivization of that. So that continues to be quite healthy. These are the top three things, which I think is quite a good traction over there. And plays around that are maybe financials also, direct equipment suppliers also, certain consumer names which are there, platform companies are there. So those kind of things clearly emerges. The other parts which are also continues to be intact in my view is the defense Indianization, the domestic manufacturing emphasis. I don't think that has gone anywhere. It continues to be the focus. There is continuously the list of items which are to be necessarily manufactured domestically, and or the import substitution list keep coming in. Plus the clear emphasis on the domestic manufacturing of the electronic supply chain, electronic component manufacturing scheme. So that also remains very much intact, and you will see something along those semiconductor value system or the value chain manufacturing, the incentivization coming through. So I think some of these 5 6 things broadly which I mentioned continues to be the focus areas, and there the incentivization through either the PLIs or capital subsidies, etc., or subsidize or the or incentivization in terms of the lower tax rates, all those things will continue. So I think from that point of view, consumption comes to the forefront for that clear, because there is a clear incentivization for the consumer discretionary. But at the same time, other things which were moving at a good space, they also continue to be in the play from a medium to long term point of view.
Absolutely, sir. The tax breaks kind of address the urban middle class consumption side of the story. But there are also a number of agricultural schemes being launched per se.
Yeah, yeah.
How do you look at the rural reforms or such rural reforms, and how would they impact the market?
No, so basically, when you're talking about the low ticket consumption discretionary, I think that clearly touches the rural part as well. Urban discretionary is a very obvious outcome of this tax relief which is there. But at the
Yeah.
same time, whatever been talked about, the Dhana Dhanya Yojana and all those things which are there, they are also playing part of that. So agri reforms, agri market reforms continues to be a underlying theme over there. So that will revive the rural sentiment as well. And there is a rub-off effect of the consumer discretionary, which will actually seep through the value chain for the rural household as well. So those things continue. I mean, the what it is getting lost into the noise of taxation per se, but a lot of things been said for that also. And this is just a continuation of the themes because there were 5, 6 areas which were highlighted as a themes for the budget. So
Right.
those continue there.
Absolutely, sir. We also had a number of other sector-specific schemes, for instance, Heal in India or the Udan scheme for tourism sector. Then we had some subsidies on imports of lithium-ion batteries for EVs. We
Yeah.
also had FDI cap was increased. So,
Yeah.
any of these schemes, do you feel headwinds for the sectors that are going to make a significant impact?
No, these are actually tailwinds in terms of the because the EV ecosystem relies very heavily on having a domestic manufacturing base for the batteries because batteries are the heart of the EVs, as in it's a very large component of the value what goes into the battery, a battery management system, and all that. If the more incentivization for investments which are there, because there are domestic companies which are invested into the EV ecosystem, especially the batteries and cell modules, etc. But if more FDI relaxation is there, obviously the capital constraint gets freed, right? And because it is encouraged through the government scheme, the kind of path or the clearance, etc., could be easier. That will bring in place the entire backup system of the ecosystem in the play, and that will actually create a good foundation for this EV ecosystem to evolve faster, which is a need of the hour because in China, the EV ecosystem has moved substantially ahead. US and Europe is already on that path, and India also is very much ahead as such. It's not behind, but this is actually a booster for that. So that is also faster thing. A lot of actually companies which are investing into those space are still, especially the battery and the cell manufacturing system, are actually still from a capital availability point of view, they are good, but the amount of capital which is required, I mean, if the 30% of the passenger vehicle population has to move towards the EV, then what we require in terms of scale is much higher. So this incentivization through the FDI is actually positive.
Right. Absolutely, sir. Moving beyond the budget a little, I'd like to ask you, what are some of the key themes that you see emerging in India for the next 5 years, let's say a decade?
No, so see, our some of the structural themes is basically revolve around our demographic, and they continue. And if we are to move at 6% kind of a 6% plus kind of a GDP, real GDP growth rate, then consumer discretionary and the important, as I said, the demographic is the central hub of that, and around that everything will evolve. The important point to watch out is what is your per capita GDP and whether it goes through that inflection point of $2,000 per capita. Once that start happening, then what you are going to see is there are large schemes which will come out is urbanization. Urbanization will lead to real estate as one more theme. It also leads to consumer discretionary in terms of because you want to have certain things which comes along with urbanization, maybe air conditioning, education, hospitality, travel, healthcare. All those things start coming into the play, and the infrastructure base for that again because it's more moving from the technology point of view. We have a very strong and very penetrated kind of telecom infrastructure already in place. So most of the business models also coming up based on taking advantage of that ecosystem as well. So you have a GDP continuation, which leads to per capita GDP goes to the inflection point. Urbanization comes in next, and then all these things actually start emerging out of that. So just looking at from a, like the question was like very long term point of view, if I have to take a 5 years beyond kind of a view, these things are there. Then in terms of positioning, you're basically looking at bottoms up, like which company is actually being differentiation, which has got structural opportunity to earn more than cost of capital kind of ROCs, and very large addressable markets. Those things you just remain positioned from a longer term point of view. They will be the big wealth creators.
Absolutely, absolutely, sir. Before we conclude, sir, could you have a piece of advice from you for our viewers? It can be a key takeaway from the budget or something on the recent volatility that we have seen in the markets, or anything that they must remember forever.
Sure, sure. So basically, the volatility is emanating from external world, and so we had a very volatile backdrop. Let's not. I mean, there's no better way of putting it. We have geopolitical tensions which are going on. We have a Russia-Ukraine war. We just had a Palestine and Israel conflict, which has just been like into the ceasefire, but maybe simmering under the surface. Then we have this Russia-US conflict, Russia and Ukraine conflict, which is continuing with the same, that is causing the whole disturbance which is there. There is a trade war which is likely to unfold. We don't know how it will go. So those are some of the things which are actually adding to the risk element to this. And but the domestic piece of this, if I just isolate the disturbance external and don't look at the domestic piece, we have got this budget, we have got the government continuity for now another 5 years, and the same policies continue. The focus on the job creation is clear, and of course there is an incentivization for the lower end of the lower middle class or the slightly upper middle class from the taxation point of view. So domestic story has a lot of legs to go. There is a lot of investment going into the EMS value chain, electronic manufacturing systems and all that. And we have our own demographic story, which I just alluded to. So if you actually look at those moving pieces, then there is a lot more reason to remain invested and optimistic from a longer term point of view. The near term volatility is part and parcel of that one cannot actually wish away, because we live in an interconnected world, and that does have a rub off on what we go through.
Absolutely, absolutely, sir. Well, this was a time, but this session was very insightful. Thank you so much, sir, for taking out time for us, and I hope you'll allow us more such sessions in future.
Thank you for hosting us. Thank you very much.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.